Welcome to the Swing Trading with Cycles channel. We're going to do our update on crude oil today. It is December 7th. We did an update a couple days ago. We talked about how the daily cycle decline had basically started after day 3. That was on day 5. And so we'll zoom in here to the oil. This is a chart of WTI, West Texas Intermediate. And you can see, so day 4, 5, 6, 7. So this would be day 7. Now, here's a possibility, right? And you'll hear this a lot from Cycles folks, and that it's good to kind of understand what that means. There's certainly a possibility that this was not, this day 45 was not a daily cycle low, the same way that this wasn't, right? It looked like it might have been, and that maybe we're about to make a daily cycle low now, right? So that instead of this being day 45, it's actually day 52. Now, what I'll say is that could be the case. It could be that that's how it plays out, and we'll know that in hindsight. But it also doesn't really even matter, actually, because whether this is day 52 or day 40 or day 7 of a new daily cycle, we're making lower lows and lower highs. So we're clearly in a downtrend, and I would say in a pronounced downtrend, because we can barely rally for 3 or 4 days before rolling over, right? I mean, at least look at this rally lasted a little bit, a little while. So, and I talk about this in the previous videos, this last daily cycle topped out on day 30, but it was just a double top of this. So, I hope that makes sense to people, right? Like it's this thing here. So this is a rally that lasted, to this peak lasted 10 days. And then we just almost gave it all back, and we just kind of made our way all the way back to day 30. So another way of saying that is we rallied for 10 days, right, to that peak, and then we declined for several days, and then we rallied back all the way just to get back to where we were on that day 10 peak, and then we collapsed on day 30. So we did make a slight higher high above the high on day 10, but that's just a double top. That's not bullish. And for all intents and purposes, this daily cycle rolled over on day 10. And so here we're seeing this roll over on day 3. And again, maybe this is going to bounce and we're going to get something more substantial. But this closed above the 10-day moving average. As I said, you could draw a little trend line there. More importantly, if we flip over to the weekly chart, we can see, this is the other, potential different interpretation, right? So you could say that maybe this is not your weekly cycle low, and we're still declining into a weekly cycle low. This would be week 34 instead of week 10 of a new cycle. Doesn't really matter. It does look more likely that this is week 10. And the reason why that would matter is because it would suggest the weekly cycle decline still has several weeks to go before it bottoms, as opposed to this being week 34, and we're potentially seeking out an ICL. So a good way to think about that is, are we seeking out a DCL that's going to be an ICL, right? And then we're going to get a more substantial bounce on the weekly, or are we actually on week 10 and we're going to decline for another 4 or 5, maybe 6 weeks? We'll have little bounces along the way, just like this was a little lower high. I suspect it's the latter. That's what this chart pattern is telling you. And most importantly, if you go over to the highest time frame, or not the highest time frame, but to the monthly chart, when people ask, I get the question sometimes, is there a checklist of how you decide to get into a stock or what have you? I wouldn't say there's something codified, but step 1 is to look at the higher time frames and observe, are we red or are we green, right? If we're red, we're going lower. If we're green, we're going higher. Here, we're clearly red. And are we making higher highs or are we making lower lows, or neither? In this case, and if we're not making either, it means we're not trending, we're consolidating. In this case, we are making lower lows. You can see we are now below the low from last month. This is our December monthly candle. We're now below the November lows. So we're red and we're making lower lows. That's a double whammy. That's really bad. So just like high level, it's like, no, this is not an asset I would want to be in based on this chart, right? And this tells you we're still descending into a downtrend. The thing that the pivot that really kind of sticks out, it sticks out like a sore thumb, is this one down here, right? Or I should say, this area, right? Just right in the mid 60s. Now, again, we know there are comments about the U.S. buying oil at around $70 to restore the SPR. But that's a case where you want to be careful not to let the fundamentals get in the way of what you can see with your own eyeballs, if that makes sense. Like, this thing looks like it's a magnet down to the 60s, regardless of this comment about the buying it at 70. So maybe we do see a very sharp reversal right at 70 or right below it or undercut. But right now, the fact that we're in this long-term downtrends lead to lower prices, and this isn't an obvious place for price to kind of aggregate. Call it the $63 to $65 zone. So that's oil itself. Let's look at some of the energy names we talked about in our last video, how energy names were finally starting to succumb, and that is absolutely the case. First off, just look at the monthly charts. Valero is red and also a lower low on the below last month's low, XLE. So that hasn't really changed since last month. What I will do, I'll look at the daily. I think some of these are red are green on the day. So not XOP, that's red and it's making lower lows. But I think Valero might have been green on the day. Yeah. And you see it's already giving some back. It's just important to understand nothing can fall off nothing can like price can't move in one direction for too long before retracing in the opposite direction. And so that's what we're getting here. We're getting a little bit of a rally. This is your lower high before we continue lower. And for this one, price is going to probably aggregate in the 112 to 113 area. At the very least, we'll kind of see what happens when we get there. And I talked about, potential price targets for all these, so I won't go through those in great detail. But I did want to just call out, that's an important feature of price action. This idea, okay, so most of these, so these actually started green for the day and now they've gone red. How do I know that? And I'll tell you, it's actually a really simple concept. Anytime you see a candle with an upper wick, it means it was green at one point, right? Like, think about that for a second. The portion, the wick, that upper wick, that whole thing used to be the body of the candle at one point, and it was green, right? And then it rolled over. It rolled over below the opening price, and it became red. And that's what you're seeing this pattern in most of them. So that's Devon Energy. This is ConocoPhillips, right? So they all have that, So the day started out kind of promising. You had a little rally, and then it just petered out. And so we've got a lot more downside to go. In terms of time, because again, we're only on week 10 for oil itself. And if you look at these names on the weekly chart, some of these have only been declining for like 4 weeks. So wouldn't be surprised to see them have a very similar decline as oil in terms of time, right? And the last thing that we'll do is we'll look at oil compared to a broad commodity index, because we know oil is a part of the commodity index, but how is it trading relative to the commodity index? And you can see here, we'll start with the monthly chart, just as we talked about, just kind of looking at the higher time frame, see the lay of the land. And we are, I'll put this to linear. We are very red. And of course, we had that point where we went below zero, and that's why you have this thing here. So we can almost ignore that. But oil has been trending significantly lower against the broader commodity complex after kind of consolidating here for a little bit. And so that tells you, and just for context, energy makes up about 40% of the commodity index, and oil makes up most of that. The other piece is natural gas. And so if oil is declining versus the broad commodity index, and let's just look at the commodity index itself, that is also declining, right? Like, look at this. This is just the commodity index itself, not the ratio chart anymore. That is a big red month. It's also making a lower low, so it's below last month's low. It's seeking out this pivot here down at 2342. And so if the commodity index itself is making lower lows and oil is making lower lows relative to the index, and oil is a part of it, it just all spells bad news bears. And as I've talked about in all the previous videos, we are moving into the 3-year cycle low, this being the peak, right? And that makes sense. We had this like crazy rally. How many months was this, right? And it goes back to that concept I just talked about. Nothing can rally in a straight line for too long. So we rallied for 27 months, right? And so now we're getting our decline, and we would expect we get the low sometime in early 2023, like February, March, April. That would give us about 3 years. And so there is downside to come, but the good news is there'll be a great buying opportunity on the other end of it. So we'll leave it at that. We'll continue to monitor and certainly put updates out on Twitter as well. But we'll leave it there for our oil update for today.